Today, we are diving into a very important theme investing beyond the noise and timeless principles for building wealth. And to help us understand this better, we have with us a very special guest, Harsha Upadhyay, our CIO at Kotak Mahindra Asset Management Company. Harsha has decades of experience navigating market cycles and building long term wealth for investors. Welcome to the show, Harsha.
Thank you, Kshitij. It's a pleasure speaking to you.
Thank you so much for taking the time out. And it's always a pleasure to have you on the show, Harsha. And let's begin with the basics. In today's hyper connected world, there's constant noise from, you could say, social media chatter to daily market movements. So, for an average investor, it's overwhelming. So, what's your advice on how one should filter out the noise and stay focused on long term wealth creation?
Now, definitely, it's not easy, right? Because there is so much of information that's coming from all sides. You really feel left out if you keep ignoring all of that, and at the same time, you have to look at some of them and act on it as well. So the key to all of this is to understand the business that you are investing into and understand what are the key drivers for those investments. What are the issues that can impact those businesses from a medium to long term, right? So then you will know the information that's coming in, whether that is relevant or not for that business, and whether it's going to change the direction of the company or not.
Mm.
Once you know that it is relevant, then you have to see whether it is material or not in terms of the impact that it will, right? That is also important. It may be a relevant piece of information, but it may not be so material when you're holding the stock for a medium to long term, right?
Right.
And after all of this, you should also be able to manage your emotions, right? Because we are all driven by greed and fear. And if we cannot manage our emotions, then to segregate the information that's coming in and its impact on the stock or the business also becomes difficult to understand. I would like to add one more point. I think the valuation at which a particular business is trading at is also important, because same news will have different level of impact depending on where the valuations are, what are the sentiments surrounding the market at that point of time. The sentiments may not be relevant for a medium to long term investor. It may be very relevant for a trader. But for an investor, it's always important to understand the relevant information, how material it is, and at what valuation the stock is trading, because the reaction would be dependent on where the valuations are.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.